Good morning everyone and welcome to the Moneycontrol live stream. You're watching Markets with Santo and CJ. Well, we have a lot of numbers, a lot of earnings and brokerage bets to digest today. But in the spotlight, we are putting Bajaj Finance after the company's second quarter earnings that came out yesterday. Now, Santo, if you look at it, it seems to me that Bajaj Finance is becoming the HDFC Bank of the NBFC space.
It already is. It
is in a way, yeah. I mean, in a way, if you look at it from the earnings perspective, another boring quarter with very strong earnings growth. If you look at the top line, you look at the bottom line, more than 50%, in excess of 50% sort of growth numbers coming in from the company. If you look at some of the key metrics such as loan growth and asset quality, both saw very strong numbers coming in. Loan growth numbers were very strong. Asset quality also continued to improve, which has been the trend, of course, for Bajaj Finance for quite some quarters now. That also continued to improve in the second quarter. And more importantly, Santo, I think going ahead, there has been a lot of debate whether Bajaj Finance can sustain the valuation that it has. We have seen recently we have seen a little bit of correction in the volatility that the market has given in the past few months. But Morgan Stanley is of the view that the stock will be a very strong compounding growth story over the next few years, and that I think that is the conviction that has come from the earnings for the second quarter.
Well, fair points all, CJ, very clearly. And before I take the other side of the argument, a quick trivia. CJ, if you had invested in Bajaj Finance shares in 2012, you're sitting on 100 times your original principal. That's the kind of gains that the stock has given.
Yeah, maybe instead of taking the loan, you should have invested. I mean, that would be the argument in case of Bajaj Finance. Like this talk about Eicher Motor, instead of buying the Royal Enfield, maybe you should have bought the stock instead.
But then, CJ, again, now can you expect those kind of returns going forward? That's the big question, because now Bajaj Finance has some kind of a reputation of being a multi-bagger. So anybody investing in Bajaj Finance today is probably trying to make the same kind of gains that the stock had given in the past. Now, if you look at the last 6 months performance, the stock price performance purely, even though the company's operating performance has been showing a steady improvement, the pace of growth, that is slightly moderating, and that is again inevitable because the base effect is now slowly beginning
it's
to
becoming a giant in its own right.
So in the last 6 to 7 months, almost more than 8 months, I think the stock price has really not gone anywhere, reflecting those multiple concerns, mainly whether the growth rates will be as high as before. Remember, the market was giving a higher valuation to Bajaj Finance mainly because of the abnormally high rate of growth, which is now beginning to moderate, and that being the case, probably the valuations are also shrinking a bit. So not a bad stock here really, but can you make the same kind of returns that you have made in the past? That is the question, and I'm not very sure if the stock can continue to deliver
Santo, my counter to that is that yes, maybe on the traditional business side you have seen growth come down, but let's not forget that Bajaj Finance is entering an evolutionary period wherein it's slowly and steadily becoming a fintech play. And I think because of that, because of the the customer acquisition pace that we are already seeing in the very initial months of its fintech journey, we are already seeing that the company has been accelerating the customer acquisition process already. I think therefore the next leg of growth could be sustained at the same sort of level that we had seen in the past 15 odd years because of the traditional side of the business, or the legacy business as we may call it. And you can see that in the numbers for FY23 that the company is projecting, and for Q2 as well. In FY23 they believe that they can easily add around 11 million new users through their app and through the digital platforms. They've already added about 2.5 million customers in the second quarter itself. Apart from that, they're expecting the overall customer franchise to jump to almost 69 million from about 62 million at this point of time. So the management's commentary, Santo, in the conference call to analysts was very strong, and it has remained strong the past few quarters now, because I think Rajiv Jain has scented blood. I think he knows that this transformation is going to catapult the company into a different level altogether, and that is why I think they have indicated that they are very confident of strong growth not only in FY23 but as well as FY24 and maybe in the coming years as well. So for me, yes, the valuation premium could sustain, largely because Bajaj Finance is no longer an NBFC. I think now it ought to be looked at as a fintech play much like, the way investors were looking at Paytm 1 year ago?
Well, technology can be a differentiator to some extent, CJ, but let's not forget at the end of the day, it is how many loans it is able to make, right? Now, if you look at technology as a differentiator, HDFC Bank is much better placed than most of the other banks, right?
I don't think the net banking experience of HDFC would
No, but
be
then compare it to some of the PSU banks. You will anyway find that, will always find that.
But if you compare it to ICICI Bank, does HDFC Bank stand?
Just ICICI Bank, but on the whole, HDFC is right up there. But look at the returns of the stock in the last 5 years. It's been lower than that of the Nifty, because at the core, at the end of the day, you still have to make those loans, grow your asset base, right? And those are dependent on a multitude of factors again. So this might be a good move, but again, can it again lead to a re-rating of the stock purely based on that? I'm a little skeptical.
I think, Santo, the cross-selling opportunities that Bajaj Finance has, I think, could be much more than what HDFC Bank has to offer at this point of time, at least, because let's not forget that, although RBI has tried to bring, the NBFC space on par with, the banking space in terms of regulation with some of the recent moves that it has made, but still Bajaj Finance enjoys a lot of regulatory leeway that HDFC Bank, as being a bank, cannot. So I think that is where probably for me, the cross-selling opportunities that will arise from, having a digital platform like Bajaj Finance has at this point of time is probably one of the reasons why it could enjoy premium valuation going ahead. Well, that said, let's move on to the trade setup for today, and it looks like a very volatile sort of a setup, because if you look at the SGX Nifty in the morning, it was indicating almost a negative sort of a start, about 50 to 60 point sort of a cut on the Nifty. But at this point of time, it looks like we might be in for a positive start, because there has been a decent recovery in the SGX Nifty futures over the past 15 to 20 minutes. That said, the cues from Wall Street clearly are quite negative. Wall Street started off the day on a strong footing, but ultimately ended a day nearly 1% lower, largely because traders have now raised their expectation with respect to interest rate. That is the point at which the Fed will stop raising interest rates, and that point now seems to be at a historical high of more than 5%, Santo. So clearly, market is getting angsty, but we are not really seeing that in the stock performance so far. Apart from that, if you look at the Rupee market, the Rupee market also today has started off on a weak note. Yesterday, we saw a massive comeback from the Rupee after, supposed intervention from the RBI by selling dollars. But at this point of time, because of the the strength we have seen in the US dollar index overnight, the Rupee has also started off on a weak note.
Well, the market appears to be showing signs of weakness at higher levels. The conviction clearly seems to be missing if you look at both yesterday and the day before's trading action. Technical analysts are now closely eyeing the 17,500 mark. If the Nifty manages to convincingly close above that level, probably that is where it could trigger more short covering. But we are at this point still seeing some bit of sluggishness in mid and small cap stocks. In terms of a build up of short positions, you are seeing shorts being built up in stocks like Aarti Industries, AU Small Finance Bank and IDFC First Bank.
Well, Santo, I think nicely put. Also, guys, if you have any, comments, if you have any questions that you want us to take up, please use the hashtag AskMC, and you can keep commenting on the comment section below, and we will try to take that up during the show, or at least in the coming shows going ahead. That said, newsmakers today are, largely from the banking space, Santo. I think the first name on my radar today on the newsmaker segment is Yes Bank. Now, why Yes Bank is in news is largely because the Competition Commission of India has now approved the stake purchase that Carlyle and Advent want to do in the lender. Carlyle is set to purchase about 10% stake in Yes Bank, and Advent is also looking to purchase about 10% more stake, Santo, in Yes Bank. And I think this is a very, very crucial moment in Yes Bank's revival journey that we have been seeing since since SBI and other lenders took over operations from the erstwhile promoter. Now, I think this move in itself will provide a lot of confidence, because we have already seen that earnings have taken a turn for the good. Asset quality has been consistently improving on a quarter-on-quarter basis for at least the past 1 year. So I think this is one interesting name in the banking space which does not get a lot of credit for the work that it is putting in at this point of time.
Well, at this point, I think this is just an incremental development, and the market has already factored it in. It's just a CCI approval. So I'm not sure if the stock might react to it too much. The immediate trigger for the stock more is the end of the lock-in period in 2023, the 3-year lock-in period for investors holding more than 100 shares. I think that is something which is probably keeping bulls a little tentative about Yes Bank, although clearly there has been visible signs of improvement in the asset quality and the bank is in a much better shape than what it was 3 years back. IEX is the newsmaker on my list now. Disappointing set of second quarter earnings, both in terms of year on year comparison as well as sequential comparisons. Revenues are down. Now, there have been concerns that IEX had been losing market share. The management sounded quite upbeat, but finally it seems to be finally reflecting in the bottom line, and also the extension of the price cap on the power that is traded on the exchange, that is also probably affecting volumes. This also leading a lot of volume to shift into the term ahead markets, where it's not exactly a monopoly situation, where the competitor Hindustan Power Exchange is also pretty strong. So that seems to have affected Indian Energy Exchange quite a bit.
I think, Santo, overall, I mean, the past 1 and 2 quarters have been really sort of a letdown for IEX, given the sort of stock performance that we have seen in 2021. And of course, the entry of a new player in the market will always create a little bit of disruption. But I think the management appears to be still very confident that ultimately it will be able to claw back some of the market share that it has lost in recent quarters, as well as improve volume growth going ahead. We are seeing increasingly a lot of state discoms are getting dependent on spot trading market for their power needs, not only incremental power needs, but default power need or base power needs that one refers to. So I think overall the market is very strong. It is a growing market. I think there is space for both of them to grow at a very, very high pace going ahead.
Well, I think the price cap at this point in time is a bit of a dampener,
I think
which
yes,
is hurting overall volumes.
That is true. That said, the hot brokerage bet today, well, from my end, the hot brokerage bet today is a report coming out from Kotak Equities, institutional equities actually, on Indigo Paints, where they've initiated coverage on the stock. Now, they have given a reduced rating as well as a price target of about 1,475 rupees at this point of time. Now, Kotak believes that the cautious view that they have on the stock is largely because of the rising competitive intensity in the industry. We have heard about entry of JSW Steel, Grasim Industries. All of these players coming in will have an impact on pricing power as well as margins going ahead, and that is one of the reasons why Kotak has a reduced rating. But apart from that, Kotak is very, very positive as far as the prospects of the company is concerned. They expect Indigo's earnings to compound at a healthy rate of about 31% on an annualized basis going ahead. And I think they believe that this is one stock to look out for apart from Asian Paints in the industry.
Well, with that, the market has opened. We are seeing a fairly firm start on the Sensex. Yeah. It's up about 176 points in early trade. Quite a good comeback by the bulls, CJ.
Yes, Santo, I think if you look at the mid-cap space, the Nifty mid-cap and the Nifty small-cap index also are having a good ride at this point of time. The Nifty small-cap index higher by about 0.6%, the Nifty mid-cap about 0.5%. The volatility index, the India VIX, has declined another 1.5% today. So clearly, at this point of time, bears are not having any sort of joy. It is the party belongs to the bulls ahead of the Diwali, festival. And sectorally, Santo, if you look at all of the sectoral indices at this point of time are in the green territory, barring the Nifty IT. The Nifty IT is the one index that is seeing a little bit of profit taking, although it is somewhere around 0.4% lower, so which is not much of a deep cut, but clearly it is the one laggard at this point of time.
Well, and among the gainers in early trade, you have L&T, SBI and Mahindra & Mahindra Finance. Bajaj Finance and Bajaj Finance FinServ both are strong in early trades. And CJ, the stock on my watch list on hot brokerages is Nestle. Antique has upgraded its rating on the stock. According to Antique, the strong second quarter earnings, which is the 11th quarter of solid double-digit growth in volumes, is quite a heartening factor. And according to Antique, capacity expansion, increase in its distribution reach and also product innovation are some of the factors that should help Nestle sustain its premium valuation. Besides, input costs are also easing, and that should provide some relief to margins in the quarter ahead.
Well, Santo, I think time for our stock takes on the stocks that we feel would be buzzing in trade today. And the first name on your list
is one which is usually on the list of your favorites, that is Delivery. Now CJ, this is the point I'd been making for some time, that all the expectations seem to be a little out of whack with the reality, and if you look at the business update given by the company in the second quarter, some of those concerns appear to be coming true. Now the company has said that it expects moderate growth in shipment volumes for the rest of FY23. Now the company has not turned a profit in quite some time now, and this development means that you're not going to see any profitability for the rest of FY23 also. Already valuations are pretty high, so I think this stock could probably be under pressure, at least in the near term.
Well, Santo, clearly I think the disappointment on the volume front would be something that the company would have also felt, given the fact that they've indicated that discretionary spending is not really picking up in the way that they had expected earlier. But that said, I think there was one crucial bit in their update wherein they said that in the last month, that is September of the second quarter, they did see pickup in volumes, which has carried forward into the third quarter as well. So therefore, I think there is expectation within Delivery that they will see an improvement in volumes as well as margins on a sequential basis in the second half of FY23. Now, I think if you look at the stock correction, the stock is already down almost 30-35%, from its highs, and I think there has been a decent amount of the sluggishness in volumes has been already priced in to the market. Overall, I don't think Delivery or anybody else also expects Delivery to lose the market dominance that it clearly has at this point of time, especially when it comes to express deliveries or e-commerce deliveries. So I think this is a blip in the radar, Santo, for me. I don't think it is reflective of any sort of structural damage that the company is going through or structural change that the company is going through. And I would expect that they will recover from this as and when the economy also starts doing well.
Well, next stock on your watch list.
Well, Santo, the first stock on my watch list today is Pnb Housing Finance. A very interesting development. Now, let's jog our memories back almost a month back, Santo. Canfin Homes had a major crack when, reports came out. Then Girish Kosgi was going to resign as the MD and CEO of the company. And, everybody said that with Kosgi going, what will happen to Canfin Homes, given that he was such a material to the, the revival that we have seen in Canfin Homes and the way they were able to get out of COVID in the past 2 years. Now, it seems that Pnb Housing Finance is the one that has scooped up, Kosgi from, Canfin Homes, Santo. And I think this is a very, very important development as far as Pnb Housing Finance is concerned. I think he could be a game changer for the company going ahead and entering into a phase where there is a lot of optimism for real estate, sector, for housing demand, for NBFCs themselves. So clearly, I think, Santo, PNB has realized that if they want to emerge out of this, new cycle, as probably another Bajaj Finance or a HDFC out of it, I think they need somebody like Kosgi to be leading their mantle, and therefore I think this is a very, very positive development.
Huge bump up in stock price over the last few days, almost 20-odd%, more than 20%.
Yeah, I think probably the market was also already sensing it.
That said, this is more of a sentiment-led rally at this point in time. Kosgi still will have to do all the heavy lifting over the next few quarters. The numbers are going to be the numbers finally have to be delivered before the stock then re-rates. That said, between 2011 to 2019, the PNB Housing Finance saw a good run-up in its a good build-up of its business, and suddenly seems to have lost way in the last three odd years. It might have almost got rectified with that Carlyle deal, but that never happened. That said, there's plenty of room for valuations to improve, because the stock is quoting at less than book value at this point in time, and there's a fairly good track record to show that what the company is capable of doing. But in the short term, I would say that this is a sentiment driven rally which may not sustain beyond a point. We'll still have to wait for a couple of quarters before the numbers start coming in.
Yeah, absolutely. Earnings delivery will ultimately be very important, but I think at this point of time, traders will not mind riding the sentiment.
Well, ITC is the next stock on our watch list. Good set of second quarter numbers there, and clearly the stock has been among one of the best performers of 2022. Now, according to Morgan Stanley, the performance of the cigarette as well as the FMCG business has been better than what market was expecting, and it's also a good play on the buoyant consumer sentiment that you're seeing right now. But that said, CJ, stock has already run up quite a bit from around 210 odd levels. It has gone up to 340. Now I think you need some more solid triggers there. The much talked about divestment of hotel business, that is I think something what the market is now waiting for. The earnings thing has already, earnings improvement has already been baked in. Probably now to see the kind of move that you saw in the last 7 or 8 months, that will require some more solid triggers, and until that happens I would be a little cautious on ITC.
Sando, you took the words away from my mouth. I think I also believe that, of course, one major surprise that probably what the market will be reacting to today would be the Q2 cigarette volume growth, almost 20% jump in cigarette volume growth. So clearly there has been an acceleration, in the cigarette business, and which is very funny, Santo, because if you look at Colgate's earnings, there was a de-acceleration in toothpaste volumes, which basically seems to me people are smoking more and not brushing their teeth. So that is a very concern. I mean, dentists are going to have a field day ultimately. I think they will be the major beneficiaries out of this. That said, coming back to the stock, it seems like clearly, Santo, not only the positive earnings, but I think the expectation of a demerger of the hotel business, I think that also is baked into the price at this point of time. Because if you look at the stock performance, I think it's just not the earnings. I think those sort of triggers as well, as far as the restructuring of the business is concerned, has been baked into. And I think if you look at the recent, some of the activities that we have seen from high profile investors, such as Parag Parikh, who were also big, who had called the bottom at one point of time in ITC and then, invested very heavily. They also had started booking some profit, which goes to show that maybe the upside at this point of time could be a little limited, even though earnings momentum will continue going ahead.
Well, last stock on a watch list this morning is Axis Bank. Again, a strong set of numbers there. The stock has been lagging its peers for some time now, but the latest performance, latest quarterly numbers should hopefully address some of those issues. Now, net interest margins are at a 26 quarter high, and the return ratios have also been the highest in 7 years. So these factors put together, probably you could see the stock being in the limelight.
Well, Santo, clearly, I mean, very strong earnings and loan growth performance from Axis Bank. But again, I think in the case of Axis Bank also, I think you would expect that it will continue to lag behind peers like ICICI Bank and SBI. A lot of the positive news in terms of earnings has already been baked into the stock performance. But I don't think I would expect that a valuation discount to somebody like ICICI Bank at this point of time narrowing any time in the future, because for me and for the market it seems that SBI and ICICI Bank remain the top two names at this point of time, then followed by HDFC and then maybe ICICI Bank, Axis Bank at this point of time. So therefore, I think for me this is one stock to keep in your radar, but I think we would need very, very meaningful triggers for any sort of outperformance from this counter going ahead. Well, Santo, a lot of our viewers have been posting comments. Meenakshi Pai, thank you so much for all the best wishes and season's greetings to you as well. But she has been asking Santo that Nosil and Hindalco are one of our biggest holding, and any thoughts on those two stocks?
Well, with Hindalco, I think probably the aluminium prices are beginning to bottom out, and the bigger trigger more than aluminium prices is the performance of Novelis. At least we have not seen any concern there, although one of Novelis' leading clients, that's Ball Corp, has trimmed its guidance for the rest of the year. But at the same time, some brokerages have pointed out that Ball Corp's problem are more company specific and not related to the industry as a whole. So at this point, the stock price performance seems to be showing that the market is hoping that aluminium prices will remain steady at these levels, and probably Novelis performance will drive the upside.
I think, Sandro, the demand is a major problem for Hindalco, not only Hindalco but the entire aluminium industry, because earlier the entire talk was that of course supplies will improve, so therefore supply will be in deficit, and therefore demand being strong, you could see very strong pricing environment for aluminium. But clearly, even though supply has been tight because of the ongoing energy crisis in the European Union, because demand itself is now under doubt on the fears of global recession, I think the pricing power that a lot of aluminium companies enjoy, that will not come back. You can see that in the recent earnings of Alcoa as well. So I think Hindalco is one stock that I think will probably stay a little, under the radar for the time being, until unless you see the market dynamics changing. A lot will also depend on how the new capex will start, impacting earnings going ahead, because the company is embarking on a very strong capex, journey going in the next 3 to 4 years. And clearly, at the end of this decade, you would expect Hindalco to come out on a strong footing ultimately.
Any other questions, CJ? Or
well, Santo, we had one more. I think one of our viewers, Vivek Joshi, wanted our thoughts on Indiabulls real estate. So I don't think both of us have really tracked that stock that much, but I think in general, if you look at real estate space, there is a lot of feel-good factor as well as the real estate companies are concerned. I think recently one of the managements of of a real estate company had come on CNBC Santo, and they were suggesting that even if there were another 50 to 100 basis point rate hikes, I think the market was strong enough to absorb it and there would be no demand damage. So I think that is a very, very good indication as far as residential housing demand is concerned, and therefore I would expect that in general a lot of real estate companies will do well in the long term, but what needs to be seen is which one would be the biggest gainers and which one would be the underperformers.
Yeah, just looking at Indiabulls Real Estate's price chart, and there has been a huge price destruction over the last 8 to 10 months. The stock is off from its high of 180 and it's down to, it's almost halved, and it's been clearly an underperformer. It's not participated in the rally at all, and this seems to indicate more of company specific problems, because we have not seen other real estate companies fare so poorly. In fact, most of them, while they took a beating this year because of the increase in interest rates, which many feel could affect demand for home loans, but on the whole the outlook on the sector still remains positive. But that's not been the case with Indiabulls. The stock has been continuously underperforming, and clearly the price seems to indicate that the market is not so hopeful of a recovery at this point.
Well, Santo, on that note, we should wrap up the show.
Yes, thank you for watching, and continue to post your comments and give feedback in the comment section below.
And as usual, guys, you can keep on following us on the social media links that you can see at the bottom of your screen, and the place to be for all of your financial news, that is moneycontrol.com, and you can also download our app Moneycontrol from the Google Play Store as well as the Apple Store. So we will catch you live at 3 p.m. Till then, have a great trading day.